In this video, we're going to have a look at another American wholesale giant, namely Costco. It is a company loved by many. It is a company that made a feature in the world famous movie Idiocracy with the famous quote, "Welcome to Costco, I love you." So I think it's fair to say that Costco is very well loved in the United States. But let's have a look over their financials. Let's see exactly what Costco has been up to for the last 10 years. And let's see whether or not if we buy the stock today and hold it for a decade, if we can expect to outperform the stock market. So looking here over at their revenue, we can see a steady growth starting with 105 billion in 2013, which has risen all the way gradually, slowly but surely to 226 billion here in 2022. An overall compounding annual growth rate of 8%. Of course, the last 2 years are slightly higher than all the trend that we've seen before this because of the COVID pandemic, because of the stimulus that was injected into the economy, and of course, because of the inflation that's been running rampant all throughout the world. So these numbers might be slight outliers when it comes to the overall trend, but we do see a very steady growth here for Costco net sales or Costco revenue. Of course, they make most of their revenue from selling their products, but they also make a small portion, I think just over 1% of their membership fees, which they've been heavily pushing towards their customers to really increase their brand loyalty. EBITDA here has been growing in line with revenue, but slightly faster, 9.3% annually, starting with 4 billion in 2013, which has risen all the way to 9.6 billion here in 2022. Their debt level is overall relatively low, starting with 6 billion in 2013, 11.5 billion in 2022, which is almost covered, if we have a quick glance here, by about 1 year of earnings. So overall, I'd say that debt level is very, very low, and they can definitely increase the leverage if they want to really push for a massive expansion here in the future, because their earnings pretty much allow for that. They also have quite some cash on hand, almost in line with their debt level. So if they want to, they can pay back their debt immediately and do not have any risk of bankruptcy whatsoever. Market cap here, so this is the price on the open market itself, has been risen for the past 10 years by about 15.3% annually. And I think any proper investor would like to have an overall portfolio return of about 15.3% on average. Enterprise value here is the entire value of the business. So it's the market cap or the price on the open market itself, to which we then add their debt level and we subtract their cash. But because their debt and cash basically cancel each other out, we do see that enterprise value is basically in line here with market cap. So this then brings us to their EV/EBITDA ratio, and this is where we see a relatively high premium, at least in my opinion, for a wholesale Costco. Of course, it's fair to say that Costco has been growing their revenue and earnings quite steadily, and it's a very big player in the American wholesale market. But for the year 2022, they have been trading at almost a 22 times multiple. 2021, they saw 23.5 times, while their average multiple here is 17.1 for the past 10-year trend. So we definitely see that for the past 3, maybe even 4 years, that their multiples has been coming up quite a bit, and I would even argue that they are becoming into the overvalued territory. But let's have a look at their projections later on. Let's just take this number for what it is. Net debt to EBITDA, like I mentioned, if they want to, they can basically pay back the entirety of the debt that they have on their balance sheet with 1 year of earnings. So this means that Costco is in no risk of bankruptcy whatsoever, so we don't really need to go further into that. This then brings me to their cash flow. So their cash flow from operation, this is all the money that's available in their account at the end of the year, after they've run their entire operation, after they've bought in their products, after they've paid their leases, after they paid their employees, after they paid the gas on their trucks, all the transport, everything associated with the business is included in the cash flow from operations. And we see here a steady growth in line with their EBITDA number of about 8% every single year. 3.5 billion, 3.4 billion in 2013, 7.4 in 2022, which has come down a little bit from their 2020 and even 2021 numbers because of some additional expenses that they had to make. Of course, inflation also cuts into the margin of a wholesale company, so we do see a slight hit here in 2022. Their capital expenditure. So this is all the money they have to put into the business to really expand their operations and make sure that they can keep on running the year after as well. This includes things like buying additional leases for additional storefronts, or just buying storefronts outright, additional employees, a new coat of paint, some new trucks, anything you need to keep on running the business in the future is included in that capital expenditure. And we can see that they've been heavily investing, especially for the last 2 years, in their capital expenditure to try to expand a little bit further than maybe they have been for the past 8 years prior to that. We see a capital expenditure of 3.9 billion, where in 2013 it was just about 2.1. I do think it's fair to say that their capital expenditure has been growing in line here with cash flow from operations, so it's definitely not like they can't afford it, they absolutely can. I think this is a healthy decision by Costco management to make some additional expenses to keep on future-proofing their business. If we take that cash flow and we subtract the capital expenditure, we get what is called their free cash flow. This is all the money that is available to you as an equity owner, as a share owner of Costco Enterprises. This is the money that basically belongs to you. This money is used to pay a dividend, to buy back stock, to do additional acquisitions or open additional storefronts, or to buy back debt. Now, as we have seen here at their financials, they basically have no debt to speak of, so they don't really need to put any equity there. So most of the free cash flow that they have available here is being used to dividend it out to investors and do some additional expansion. Because as we can see here in the next table, they've not really bought back shares here for the past 10 years. They've been slowly but surely increasing it ever so slightly because of some share-based compensation to their employees, but overall they haven't really bought back or put any new shares on the market. It's quite a stable number. So this then brings me to their free cash flow per share, which is basically what you get if you take their free cash flow and divide it by the amount of shares outstanding. And we can see, of course, because their share count is not moving, that this number is moving in line with the free cash flow available in the column over here. Price per share is the price as seen on the stock market itself. So of course, because it's a price on the stock market and not based on the intrinsic value of the company, you will see that the share price will move up and down quite a bit. And to be fair, for Costco, it's mostly been moving up. The share price for Costco in 2013 on September 31st was $115, and it has risen all the way to $474 a share in 2022. Of course, they also increased their free cash flow and their earnings by quite a lot, so it makes sense for them to also see this valuation in their share price as well. But I do think the increase that we see here for the past 10 years may be a little bit high, and this is also what we see when we look at their free cash flow yield. Because for the year 2022, we see a yield percentage of 1.7%. This means that 1 year of operation here pays back about 1.7% of the overall share price of the company. This is a very low number, even for Costco historically, because on average for the past 10 years, they've been at 2.9%, whereas in 2022, they are at 1.7%. So I definitely think this means that Costco is overvalued right now. But let's have a look over at their projection here and see whether or not my speculation actually holds any merit. So looking at their EBITDA, we can see 9.7 billion in 2022, and they've been growing that steadily by about 9% for the past 10 years. Of course, the last 3 years, they've been seeing double-digit growth because of the COVID stimulus, because of the inflation rate. So I kind of expect this growth to come down a little bit here in the future, mostly because inflation will probably move away in the upcoming years, but also because I think Costco has limited growth potential, at least in the United States itself. Of course, if they want to, they can expand globally, but they have no intention of doing that, at least as of the last annual report. So let's just take these numbers at face value. So I'm going to give them a 7% growth here for the next 5 years. So I'm taking it down from 9% to 7% to be a bit more conservative. And if my conservative estimate still beats the stock market, that's when I'm going to be interested in buying this stock. And for the last 5 years, I'm going to give them an earnings growth of 6%, so really make it come down the moment that we get further into the future. This gives me an EBITDA of about 18 billion in 2032. I'm also going to take the multiple of 17 times, which is their average multiple. Even though in 2022, 2021, they've seen a way higher multiple, I expect this multiple to contract. I expect this multiple to come down in the future, which will then weigh down the stock price. So take this into consideration the moment that you look at my projection. I think the multiple that we see here for the past 3 years is higher than their average multiple, so I expect the multiple to come down to 17 times earnings. This gives me an enterprise value of about 310 billion 10 years down the road. from which we subtract the debt, we add the cash, which basically cancel each other out. And this gives me a market cap 10 years from now of $308 billion. Divide this by the amount of shares outstanding, and I'm assuming here that the amount of shares outstanding remain the same, just like they have been for the past 10 years. And this gives me a share price 10 years down the line of, let's see, 2032, of $693.96. For that free cash flow model, I'm going to do a very similar thing. I'm going to grow it by 8% for the first 5 years and then 7% for the last 5 years. Even though historically they've been growing it at 10% every single year, I expect this number to come down a little bit. I'm also going to attach a yield of 3%, which is their historic number, and again it's way higher than the 1.7 that we see here in 2022, but I think this is definitely way below the norm, so I'm going to take the average number of the past 10 years, which is 3%. If I add this 3% to their free cash flow per share, I get a stock price 10 years from now of $540.44. Right now on the open market itself, I can buy as many shares of Costco as I want for $496.01. If I take both my projections, so the enterprise value model as well as the free cash flow model, I expect an overall share price 10 years from now of $617.20. This gives me a compounding annual growth rate in the stock market alone of about 2.2% annually. But of course, the moment that we take into consideration the free cash flow that we can expect as projected here in our free cash flow model, I expect an IRR of 4.9%. Now, I always say on average, the stock market returns about 10% every single year. So compared to the overall stock market, I expect Costco to underperform it by about 5% annually, which is kind of what I expected when I looked at their EV/EBITDA multiple as well as their free cash flow percentage, because they've been way overvalued for the past 3 years compared to their 10-year average. So this is also what we see here in our projection, that I do not expect them to reach a very high share price compared to their current share price. But let's see what happens if the price goes up or comes down a little bit. So the moment that the price goes down by about 30% to $350, I expect an IRR of around 9.3%, give or take 10%, in line with market expectations. But anywhere above that, I do not think that Costco is a very attractive stock to hold. Of course, Costco is a very safe stock. It's a stock that continuously keeps on growing. It's a stock that has a lot of loyal followers. So I think when it comes to that, I just want to own a piece of this pie. You want to own a piece of this company, then power to you. Feel free to invest in a company that you like and support. But I think when it comes to financial gain, financial returns, I do not expect Costco to outperform the market in the next 10 years. Thank you very much for watching. Don't forget to like, subscribe, and all that good stuff, and I'll see you in the next one. Cheerio!